All right, let's see. Today is November 3rd, 2021. Welcome to another Wall Street Wednesday. I am Professor Milligan. Before I get into talking about another very active day in the markets, let me put my disclaimer out here. These are my ideas, my thoughts, my opinions. Before you do any trading, any recommendations, make sure you speak to your financial advisor before you do anything. Again, these are just my ideas and my thoughts. Welcome, Boo. Welcome, Christian. Welcome, James. Welcome, everybody. So, I'm not sure how many of you guys saw what the Fed was saying. As you know, Jerry Powell was talking today. Basically, they're going to start tapering. In simple language, that means they're going to stop buying back as much of the junk as they were buying. They were buying any and everything. They were pumping money into the system to stimulate the economy. So as you guys know, pumping money into the system, stimulate the economy. Now the deal is they're worried about inflation. They're starting to taper, which means they're going to start buying less, which the Fed had told us they were going to do. So they feel that inflation is under control. Or I should say under control. They feel that inflation is not out of control, even though we're coming out of the pandemic and a short supply of everything else. But again, the main thing is, which came out today, which was pretty much expected, the Fed was going to start tapering, which means they're going to stop buying back as much securities as they've been buying back. Bond market reacted to it. The bond market rallied. Prices fell, yields rallied. Stock market rallied off of that news. And I'm going to talk about it in more detail. But again, I'm pounding the table. Stay short the dollar. Stay long a couple other currencies. And I'll talk about that a little later on. All right. We're in the middle of earnings season. I just want to touch on this real quick. And you guys all saw it. Avis reported earnings. They blew out the number on revenue. They blew out the number on earnings per share. At that point, what it did was the stock rallied off of that. And I believe the float was about 29% of the float, 29% of the shares outstanding were actually on the short side of the market, which means that there were basically 29% of those shares on that short side of the market, which means those investors were playing for the stock price to drop. So what happened was we had the perfect storm. Earnings came out. Stock rallied off of the earnings numbers. I mean, they blew the number out. Stock rallied off the earnings numbers. At that point, it forced the shorts to actually have to come in and cover. If you're short a stock that runs, goes up, it's going against you, you're losing money. Two things happen. You get a margin call, which is going to force you to do one of two things. Either put in more money or liquidate, close out the position. Now, the way this thing was running, it was no question that people did not want to put more money in. And I advise you, if you're ever in a in a position like this where you're short to getting squeezed, don't put more money in. Close out your position as soon as possible. Don't play the game of trying to guess where the top is. Don't play the game of trying to guess where to short the stock. The main thing that goes on here is volatility is in there. So what happened was they announced that earnings, and I even give you the earnings number. The earnings numbers were really good. The estimate was for The estimate was for $6.87. They reported $10.74. On the revenue side, expected was $2.6 billion, almost $2.7 billion. They came in with $3 billion. So they blew the number out. After they blew the number out on Avis, what happened is the shorts started getting squeezed. And what that means is the shorts had to come in and start covering, either put in more money or start covering the trade by putting in more money or close out the trade. Most of them chose to close out the trade. So on that day, you saw the stock trade, and I'll give you some real numbers. Perfect storm. You saw the stock trade 30 million shares. Average daily volume is 4.6 million shares. Stock had opened up at 174, went as high as $574. Ended up closing at 357. It's down a little bit today too. Again, what happened? Short squeeze. Perfect storm. Came in, beat the numbers on earnings, which was going to rally the stock in the first place. Then it squeezed the shorts and ran the stock price higher. All right, so that was happening in the market on that. I know a lot of people asking what happened, how that happened. So that's the deal. It's a perfect storm. You had a huge short position in the stock that actually beat the number and ran. I actually had played Academy Sports, ASO. We had talked about that. We had traded that. I played ASO. I'm putting the symbol in so you guys can hopefully remember the stock I'm talking about. I had recommended ASO ahead of the earnings. I thought that would happen with that. I thought they were going to blow out the number, which they did. I thought the shorts would be squeezed, and the shorts were not squeezed. The shorts didn't have to cover. The stock didn't run. I thought it would. So today I think ASO is up at 47. ASO $47, $46. So it's at 47.93, basically back to the all-time high. All right, with that said, let me get my notes out here. Guys, I'm about to say some things, and I know that you guys listen to me. I know you guys follow me. I know you understand what I'm talking about. There's been some great calls made here. So I'm going to repeat some of these things because I think they're still bullish or bearish. So soybeans have not broken out yet, but I would go long soybeans. I would go long soybeans and stay long soybeans. Soybeans right now has the largest long position for commercials they've had in the last 5-6 years. It's just amazing how long they are. What I mean by long is the commercials, the farmers, they're actually buying all the soybean they can get. They're at record numbers. All right. There was a flood, I believe, in South America that created the run. But the bottom line is, I would go long this. Oats, continue to stay long the oats. There was some profit taking today in the oats, but they continue to stay long. I'm not sure if you understand the move, but we first started talking about oats, and I said I would buy oats or look to buy oats, and I got to be careful with my wording. But I said I like oats. Oats has run. That was at $6. Oats right now is at $7.55. Just so you guys know, to give you some numbers, for every penny move in oats, it's $50. So you had a $1.50 move. Do the math. $1.50 move on the $50. That's why you saw me pound the table on this. The other ones, stay long oats. Stay long soybeans. Stay short the dollar. Stay short the dollar. Stay short the Swiss franc. Go long the Swiss franc and go long the yen. The euro's trading really well too. You can go long the euro. So let me give them to you all again. I'm pounding the table on these. I think you do really well. Again, go long soybeans. I recommend going long soybeans. I talked about that last week. Stay long oats. If you're long oats, stay long oats. Short the dollar. Short the dollar. All right, short the dollar. Go long or stay long the Swiss franc, stay long the Japanese yen, stay long the euro. Now, if you guys are trading these, or anybody that's not trading these, or if you plan on trading these, make sure that you're using some type of hedge or some type of stop loss on your options. Do not take these things naked in the futures market, because you could lose a lot of money if I'm wrong, all right, or if you're wrong. So again, I highly recommend hedging everything. So again, or just buy a call or buy a put and put a stop loss. You can put stop losses on calls and puts, just so you know. But that's what I would recommend. I would recommend that. All right, cryptocurrencies. Really exciting what's going on with the cryptos. Bitcoin. I told you last week, Bitcoin had formed a bullish right triangle. I'm pulling up the currency as we speak, or the futures, I should say. Give me a second. Cryptocurrencies. Nope, that's not it. Cryptocurrency, Bitcoin. All right. So I told you last week, Bitcoin had formed make sure I get my notes right. Oh, no, I'm sorry. It wasn't formed a bullish right triangle. That's why I have notes. No, I apologize. It had a bullish right triangle. I told you that there was resistance at 63,000. It broke through that resistance. Resistance at 63,000, trading range between 60 and 63,000. We bounced off to 60,000. We're trading right now at 63,000. If we push through that 63,000, you're going to challenge the old high again at 66,000. Since it set its new high, it's traded sideways and formed a nice consolidation. I would look for a breakout. If this thing breaks out through 64, again, I'm telling you, it's going to take out the 67,000 and run from there. So again, stay with it. I don't think you'll see resistance or test resistance, but if it does, again, I would stay long this thing. I'll go long this thing. Ethereum. Hold on, I'm pulling up the symbol right now. Ethereum. All right, Ethereum. Last week, I told you Ethereum was trading in the range between 3,900 and 4,300. It broke through that 4,300 and it set a new high. You're sitting at here right now at 46.35 at a new high. I hope you guys got long on the breakout. You got support again at 4,300. It's trading extremely well, and it had a nice move on the breakout. All right. Last week, I know I'm telling you, I'm repeating myself, but last week I told you Cardona ADA, I'm pulling up the symbol, so bear with me. I told you Cardona ADA had formed a pennant, a flag pennant. And I told you that flag pennants are neither bullish nor bearish, but I did tell you that when they come out of those, the move is going to be very strong, either to the upside or to the downside, a volatility. So what happens is, again, it forms a pennant flag. The highs get lower, the lows get higher. It comes to that point, and then when it breaks up either back to the old where it started or back down to where it started. Well, Cardona ADA, it broke out today. It had a 10% breakout today off that pennant flag. Again, for those who trade options, and I had this discussion with some of my former students, if you trade options, a pennant flag is a perfect situation for you to put on a collar or even a strangle. Go long a collar, go long a strangle. What that basically means is buy a call and buy a put. A collar means you have some leeway between the price. A strangle means if you want to have the strike price on your calls and puts right at where the stock is trading or where the commodity is trading or where the cryptocurrency is trading. So we had that today. Twin, what's up? Hopefully, Twin, you went out and brought some more Microsoft. It broke out. I told you last week it broke out. It's trading extremely well. So hopefully you got some and add some to your position. It's a great time. You know my motto, buy high, sell higher. All right, so that was ADA. Right now, Cardona ADA is sitting at resistance. I would not, a lot of work in this thing. I would not be a buyer of this. I might trade it, but I would not be a buyer. A lot of work to get to the old high. All right, Doji. All right, I'm just going to call it dog because that's what I think it is. No offense intended. Now, here's what's interesting with Doji. Doji had a breakout last week, and then since then it's been back in the filling. And what it's done is it's formed follow my words here, a bearish right triangle. Bearish right triangle. Oh, I'm sorry, Gary's other twin, huh? All right. Well, I can never tell you two apart anyway. Getting back to this. Doji has formed a bearish right triangle. All right. What that means is it has lower highs and they all are bouncing off support. Support right now is right around the 26 cents level. All right. Bearish right triangle means I would play this thing to the downside. So again, I expect it now to break support. And if it breaks support, I think it could go as low as 24 cents. Right now it's at 20, looks like it closed at 27, it's trading at 27 cents. All right, a bearish right triangle. For those of you not into technical analysis, get into technical analysis. It really can help you make a lot of money in a short period of time. All right, Ripple. Part of me was like not even going to do this stock. I mean, do this cryptocurrency. It looks really, really loose, bad. I don't like trading things that aren't trading well. I'm looking at the chart. Oh, yep. Here it is. So near term, you're right at, well, I don't have the right chart up. Bear with me a second. Ripple. Where's the one I'm looking for? Ripple dollars. Ripple in dollars, US dollars. I think that's the one. All right, cool. All right, Ripple right now is at the top of a trading range. The trading range is between $1.19, $1.20, and basically $1.08. It's right at the top of that range. It might push through, but again, it's trading really poorly. If it does push through, you're in an old trading range. A lot of work in this stock, or this cryptocurrency. A lot of work. I would be very patient with this. In fact, you know what? I'm going to come out and say it. There's other ones that are trading so much better. I would not even touch this. How about that? Let me say that. If you own it, if you hope it, you're hoping, that's the word I'm using. It pushes through this 120. If it pushes through 120, you should challenge $1.40. But again, a lot of work here. The other one that you guys gave me, which I've been seeing in the newspaper now, and I'm probably pronouncing it wrong, the SHIB, the SHIB. Bear me a second when I pull up this chart. There it is, right there, the one I want. All right. So as you guys already know, this SHIB has made a major run. All right. It broke out. And by the way, there's a whole bunch of zeros here. So I can't even begin to tell you what fraction of a penny this is or whatever the case may be. So I'm going to get rid of the zeros and just move down to the basic numbers. So it broke out from, I can't even tell you what that number is. God. So here it broke out from about, I'm going to use the number 3 cents, even though it wasn't 3 cents, and ran all the way up to 8 cents, almost 9 cents. All right. That was the second breakout. All-time high. Now, here's what's interesting with this. It's formed a bearish right triangle. All right. Now, the one thing about cryptocurrencies, there's no fundamentals around them. Cryptocurrencies truly are one of the few securities that you can trade based on technical analysis and never look at a fundamental. So with that said, right now, this SHIB has a bearish right triangle. If it breaks, in fact, if it breaks down, I must say, bearish right triangle, I'm expecting to break down. Here's the challenge. Right now it's trading at almost 7 cents with a bunch of zeros in front. If it breaks down, there's no support here until you get down to about the 3 cent level. So if this thing holds up, which would be the Fibonacci's, look for a 50% retracement. So the old high is about 9 cents. It broke out from 3 cents. So 3 to 9 is 6 cents. So 3 cents off of 9 cents would bring you right to about where you're at now, maybe a little lower. All right. So it's coming back and it's retesting. The challenge is it has a bearish right triangle. So stay with it if you're long. If you're not long, I wouldn't trade it here. I wouldn't go long here. I'd wait for it to challenge that 9 cent and then get long. But again, I would not get long here. All right. Those are my commodities and my cryptos. All right. Again, I'm not sure if you're following or trading, but if you're trading any of these things, I'm talking about these commodities and these cryptos, use some type of stop losses, use some type of hedging technique, which means either buy some calls or puts to protect yourself. These things are really volatile. And the key to this is not just to make money, it's to make money and keep money. The goal is not to make money. How many of us, I'm raising my hand, have burned a stock or made an investment, saw it go up significantly in value, only to give it all back? The goal is not to give it all back. The goal is to make money. All right. So use your stop losses, use your hedges. The goal is to make money and then put that money in your pocket to see your account grow. All right. Let me get down to some stocks. Let me move on to some stocks. Boom. All right. As you guys know, if you've been following me on IG, I came out this week and said to you, and again, I butcher this name, so I'm going to type in this. I'm going to type in the symbol. If anybody knows how to pronounce it, feel free. I always butcher it, so that's why I'm posting the symbol. And I'm typing it in. You can see me trying to hesitate because the deal is I'm trying to hesitate because I don't want to say the name because I know I'm going to butcher it, and you guys are going to laugh at me. And I don't like being laughed at. All right, Albemarle. I think that's how you pronounce it. Stock broke out. It was in a trading range between 210 and 250, 251, 252. It broke through that 252, and today it closed at 261. It's breaking out. Here's the deal. And by the way, earnings are due out tomorrow in the opening. Hold on a second, I'll tell you. Earnings were due out today, so they might be coming out right now. I'm not sure on the opening and close, but they were due out today, so I haven't confirmed that. But here's the deal. For those who don't understand this, and I'm gonna talk a little bit here. All right, I'm looking at my time, so let me explain something here. When you start to look at a stock that you want to buy, trade, or any investment, you got to have a thesis. You got to have a thesis, and you got to have a catalyst if you really want to make some money. So let me explain. A thesis is what made you look at this company or this industry in the first place. So a thesis. A thesis can also be a catalyst, but a thesis could be pandemic. Thesis. Coming out of the pandemic. Thesis. Thesis. We're moving away from fossil fuels when it comes to transportation and moving towards electrical vehicles. Thesis. Now, for the company I gave you, Alba, let's see, they beat on earnings and they beat on revenue. They beat on earnings by 28 cents. All right. I'll have to see how it trades in the aftermarket. So hopefully you guys went long. I'm pounding the table on this thing. So here's the deal. I don't think anybody here would disagree with me that we're moving towards electric vehicles, electric cars, electric trucks. You know, they have electric airplanes. There's a private equity company out here that's doing electric airplanes. All right. We know that the United States Postal Service is buying electric mail trucks. So we're moving towards this whole electric thing. The key to electric vehicles and the power and speed is the battery. I don't think anyone will argue with that. The bigger, stronger the battery, the longer the car can go, and the faster the car can go. That's where the power is generated. So one of the key ingredients in a battery is lithium. All right, so here's my thesis. My thesis was we're moving towards electrical vehicles. My catalyst is all these electrical vehicles are going to need batteries. Albemarle, I know I'm pronouncing it wrong, ALB, is the second largest producer of lithium in the world, second behind a company in China. So, and by the way, I'm not sure which one of my former students is on here, but one of my former students actually brought this to my attention was Cameron. So any of you guys that were in class with Cameron, Cameron's the one that actually brought this to my attention. So anyway, that's the thesis. The catalyst is the demand for electrical vehicles is not diminishing, it's actually increasing. You've got countries and companies saying they're moving to all electric vehicles. All right. One of the key resources needed to make electric vehicles is lithium, and that's the play in ALB. All right. I don't see the demand for lithium decreasing over the next 4 or 5 years. I think that this could be a good long-term hold for you, again, based on the thesis and based on the catalyst. All right. So that's the one I put up there. Again, long at 252. The other one I put out there, again, you guys already know. Again, I'm typing in symbols. I'm going to try and type in a few. No, I'm only going to type in one on this one. AppLove, was it AppLover? APP. Hold on a second. I'll pull up the symbol and I'll pronounce the name correctly. All right. AppLovin Corporation. For those, again, who are in technical analysis, it's formed a nice big old fat cup, and right now it's forming a handle. Earnings are due out in a couple of, earnings are due out. I'll tell you exactly when they're supposed to due out. Earnings are due out. Come on, open up for me. Earnings due out November 10th, a week from today, next Wednesday. I would not be surprised to see this thing run ahead of the earnings, and I also would not be surprised to see this thing run at the earnings. This is all technical analysis. And what are they looking for in earnings? They're looking for them to earn $1. All right, so that's what they're looking for. If you decide to play this ahead of the number, stop losses will not help you because this thing could gap down. If I'm wrong, if they're wrong, if the earnings don't beat, this thing could gap down in aftermarket trading. You won't have a time. Your stop will be worthless. So if you decide to play this ahead of earnings, if you do, I would actually buy a put going into the earnings. And I'd buy maybe even an out of the money put. I wouldn't buy one right at the money, but I'd buy an out of the money put basically right near support or below support to at least that way mitigate if this thing gets hammered. I don't think it will, but again, I'm not 100%. I wish I was. Now, the next three stocks I'm going to name. These were all IPOs. And these are IPOs that traded below the offering price. You know how I feel about that. Now, for those of you who don't understand this, and again, I don't think any of you guys are really doing this, but I'm going to, bear with me, just so you guys know, I write everything down. I write notes down on everything we talk about. So I got my book here. So here's what I'm going to tell you. And I want you to follow me real quick. I told you guys a couple of weeks ago to short Forge, F-O-R-D. I told you to short SportsRad, S-R-A-D. I told you to short Oatly, O-T-L-Y. I told you to short the language company, D-U-L-O. Told you to short all those. Every one of them fell out of bed. Some of them are trying to bounce back. They're all down. All right. Let's see. I'm coming to you some other ones I had. Context, W-I-S-H. Honest, Dunkin Donuts. Was it Dunkin Donuts? Not Dunkin Donuts. Donuts. I can't remember what company that was. But Donut, D-N-U-T. All of them broke. All of them broke down. Well, guess what? Rent, Hire, and Cocoa. Short them all. I think they're all shorts. I keep telling you guys, anytime an IPO that's priced can't meet the offering price, there's a problem. There's a problem. All right. And the problem is with the company. The problem with the fact that stock was mispriced. The problem is also with the fact that the investment bankers probably couldn't get the deal done and they forced it to the marketplace. There's a whole bunch of things. One other thing, too, with these IPOs that are below offering price. Understand this. Insiders cannot sell that stock for 30 days. All right. If a company goes public and you're an insider, 144A stock, you're senior management, you cannot sell your stock for 30 days. There are some exceptions, and there are also some times where you can't sell it for 2 years. But in most cases, most insiders can't sell their stock for the first 30 days. Once the 30 days have hit, insiders can sell their stock. Now understand this. Let's imagine this. You worked for that company, you're senior management, stock went public at $15 a share. You're sitting there counting how much money you're about to make because you got a couple 100,000 shares or so. So you're looking at the fact that you just made yourself a millionaire because you work with this company and it went public. And you're sitting there and watching the thing trade and you're watching it just tick down every day. Tick, tick, tick. And you can't short it. You can't sell it. You can't do anything with it because you're an insider with 144.8 stock. Trust me, as soon as that 30-day period comes up, you're hammering that stock. You're getting out of it. You're already giving your broker instructions. All right? That's why these things are really, really rough. All right? There's no one interested in it. All right. I'm back to my notebook. All right. Also, today, Mr. Cornfield, welcome. I saw your list. But bear with me, I've got my own list today. And you're probably like, that's not what I wanted to hear, Professor Milligan. All right, let's see. 2 stocks that you guys know really well already. Affirm. AFRM. I know. If you listen to the pundits, Affirm's overvalued, Affirm's this, Affirm's that, you shouldn't trade it. I'm here to tell you something. Earnings are due out on this thing again. I'm looking for the date. Give me 1 second, I'll tell you. Earnings are due out a week from today, next Wednesday. The estimate's a loss for 35 cents. All right. Affirm right now is trading in the trading range between 150 and 161. At 161, if it gets through that, again, you're sitting at an all-time high. I love when the stocks consolidate. So what's happening now, the stock is trading sideways. It's going through a period of consolidation in that trading range. Volume is drying up. What that means is anybody who wants to trade it is already in it. Anyone who wants to sell it's already pretty much sold it. So volume's drying up. Average daily volume it's actually trading below average daily volume ahead of the earnings. So for those who are, how can I put this? Those who are really aggressive and want to buy it ahead of earnings, when it breaks through that 161, you can buy it ahead of earnings. If you buy it ahead of earnings, again, I recommend you put a stop loss in there. If you wait for after earnings, I think you'll be all right, because if this thing does beat the number in the way it's been trading, if it breaks through that 161, I'm going to go on record. If it breaks through that 161, and I haven't seen the numbers yet, just hear me out. If it breaks through that 161 on some really good numbers, I think you got a 180 to 190 move. You could probably even test 200 in the next between now and the end of the quarter. So what I'm saying to you is For those of you who don't want to trade it ahead of the number, wait for the earnings to be announced. I think you'll have a chance to buy it. And then I think it will run. That's my opinion. The other one I just put up there was Tractor Supply, TSCO. Tractor Supply Company beat the number. Beat it really good. Stock ran. Has some profit taken, which not surprised. It's formed a nice cup and handle. For those who understand technical analysis, you know one of the most powerful breakouts you can get is a cup and a handle. All right, so I am looking for this again to challenge its old high. When it does, I expect it to run. And again, so let me explain again. A cup and a handle, the cup part is it rallies up and the right side of the cup will be higher than the left side of the cup. And then what it does is it starts forming a handle, consolidation. Again, periods of consolidation are powerful when they break out. And the longer the consolidation goes and the tighter it gets, the bigger the breakout's going to be. So a cup and a handle. It's forming a handle. Look for the run. I believe. Oh, one other stock. Thank you, James. James gave us his stock. I've been following it. I love the thesis behind it, what's going on. SAIA say, if you look at the chart, my problem is it broke out. It broke out on earnings. So it broke out on earnings. I'm going to give you the exact date. It broke out on earnings on July 27th. It gapped. There's a gap between 280 and 280 and 293. I mean, there's a huge gap here. And it just ran. It's run one, pull back. It's been running basically for the last 4 or 5 days. So the breakout was at 280. Stocks trading right now at 345. So what I'm saying to you is I can't figure out where I can get in at. That's my biggest challenge. I can't figure out an entry point. The stock is broken out and it's run. I'm not saying it's overextended, but it's a huge move with a gap. So I don't chase them. My philosophy is there's another train coming down the track. I just got to sit there and be patient and wait for that next train. I don't chase them. I'm not sure if you get a chain on this one. Good call, James. And for those who don't understand, what James was saying was SAIA is a local logistics company. In other words, it's a trucking company. You see them on the highways. And what's going on here is, you guys know, there's a shortage of supplies, there's a shortage of everything. And SAIA also has some major clients. I believe Walmart's one of their clients. So they're a regional trucking company with some major clients, which means to me is I don't see any reason why that the demand for the products and service for their services is going to decrease. I don't see any decrease in that, especially with the fact of all the stuff that we have sitting there in supply chain that just can't make it to the stores, that's sitting out there in the docks. So nice call, James. James's thesis was, again, the shortage. James's thesis was basically, James, I'm telling it, was all the ships sitting in San Pedro, all the ships sitting in the harbors around the world that can't deliver their goods and services. They can't deliver it. So there's shortage of supply. And the other thing too is the logistic companies are the ones that have to move that stuff. All right, those are all the stocks I have for you guys. I see now that Mr. Cornfield has a couple here. Snaps. I'm gonna go with Snaps first. I haven't looked at that one in a while. Synopsis. All right. Bear with me a second. I'm zooming in on the chart, making it a little bigger so I can see more of what's going on here. And as you guys know, on my charts, I always go to the, I start with a weekly or a monthly so I can go back and see what's been going on recently. I haven't looked at Synopsis in years. It's been years. All right. If you look at a weekly chart, come on, stop. If you look at a weekly chart on anything I'm talking about, this right here, you can see that it's formed what looks like to be a decent cup. The problem that you have is the right side of the cup is higher than the left side. So what it means is it's challenging this old high. It's not pushing through there. Volume's kind of light. It ran off of earnings, and it basically ran off earnings, came back and filled that gap off of earnings, and now it's testing the old high. I would wait for it to go through that old high. Chart looks pretty good. It doesn't seem like it's gonna, what's the word I want to say? It's not going against you. Volume's kind of light as it's going through this period of consolidation. So I would expect for it to have a push. I would expect a push. Actually, pretty decent chart here. Again, I haven't looked at the company in years, but good looking chart. I'm gonna say on Enos. Hold on a second. Yeah, I thought so. I'm gonna say on Enos, I got no interest. I'll tell you why. Stock has been as high as $80 within and within the last couple of years, stock's been as high as 55. So here's the deal. Right here at 28, where it's closed at $29, is at the top of resistance. You got some major resistance there at 29. If it can get through this 29, it's going to be in a trading range between 29 and 30, 35. But it's got a lot of work. I mean, push through 35, there's resistance at 40. Push through 40, there's resistance at 40. 45. There's resistance at every $5 increment. There's resistance on this stock. I wouldn't play it. I'm looking at a monthly chart, so just so you know. I wouldn't play it. Now I'm going to go to a daily chart. Bear with me a second. The thing that worries me also on this is volume's really light. 300,000 shares average daily volume. I don't like stocks that only trade 300,000 shares for one reason. I know I can move that stock. I can manipulate the market and move that stock. So the thing I'm going to say to you, if you're trading stocks with low volume like that, just be aware that the stock can be easily manipulated. Just so you guys know, I've seen Dow Jones 30 stocks manipulated by traders. I've seen it manipulated. I've seen traders manipulate this opening on the market. Kramer talks about manipulating the opening on the market. All right? Seen it. So when I see little stocks like this that trade 30,000 shares, I want to make sure I'm right because this thing could easily be manipulated. And you guys have also seen stock manipulated. So what I'm saying to you is that there's a lot of work in this stock. I'm not sure why you're looking at it. And what's interesting too is the market's always right. And what I mean by that is the fact that all these people own the stock at a lot higher price, relatively near term. Oh no. Yeah, there it is. Yeah, you might get a near-term move on this, but like I said, I wouldn't be aggressive with it. I think there's other things out there that look much, much nicer. MGIC. Where you come up with these companies, huh? Magic Software. All right. So one of the things I'm looking at on this Magic Software is, wow. I know. The old high is really old high. Back in 2000, the stock got up as high as 30. And it's basically been trading sideways ever since. So here's my comment. Let me switch it to a daily. That was a monthly. Now I'll give you my comment, MGIC. So here's my comment. Near term, the stock is broken out. Near term, there's not much resistance on this thing. You have earnings coming. The thing I would say to you, though, is I'm just looking at the stock. It does not look like it has the ability to give you big moves over big time. So what I mean by that is I'm looking at the stock over and hold on, let me zoom. All right. So since the beginning of the year, the stock was at $15. Traded sideways between 15 for most of the year, between 15 and 18. Finally broke through that 18. Then it traded between 18 and 20, and finally broke through the 20, and now it's at 23. I guess what I'm saying is, um, I'm not crazy about it. Yeah. And it looks like even when it beats earnings, it's been beating earnings. 1, 2, 3, 4, 5, 6. For the last 6 quarters, it beat earnings. But even when it beats earnings, there's not much movement in the stock. Although the last earnings beat drove the stock from 17, 18 to a high of 20. So it gave you it gave you a $2 move. So on its best day, when a positive earnings number, it gave you a $2 move. Here's another one that gave you a $2 move from 14 to 16. So I guess what I'm saying to you on this, Mr. Cornfield, is that I would be, I'm not sure what kind of move you're going to get on this. Understand, and I say this to you guys all the time, I say it all the time, I'm saying it to you guys now. I want to be right, but I want to be right big. I don't want to be right and make $1. I don't want to risk $1 to be right to make 10 cents. All right? I want to be right with $1 to make $1, to make $2, to make 50 cents on $1, 60 cents. I don't want to risk $1 to only make 10 cents. It just doesn't make sense to me. So when I look at a stock, I always look and say, how much can I get out of it if I buy it? So if you buy this stock at 24, how much can you get out of it over the next 12 months? Can you get the stock to $48? Can you get a double on it? And it doesn't appear to be that kind of company. All right. And the last one Mr. Cornfield gave me was Quantum Services. I should always start out with a monthly chart. Only because, all right, Quantum Services. All right, all-time high. We're right at the all-time high. Cool. Let's go to a daily chart now. All right, let me get some more here. All right. So, traded sideways, did some back end filling, broke out through 119 to go to the old high. Now it's back in the filling, back to the old trading range. And again, you have earnings coming out tomorrow. And it's back near some major support right at 116, 115, right around here, 116. So I guess what I'm saying to you is that, and earnings are due out. So it traded down ahead of earnings. Doesn't mean anything because it could be profit taken. But on big volume, I'd wait for the number to come out. I'd wait for the number to come out and see if it's going to challenge this, if it's going to beat the expectation and challenge the old high. You're sitting here right now, like I said, at support right around the 115 level. So you got some minor support at around 120, but your major support's right around this 116, 115 level. I'd like to see it, the earnings come out, beat the number, and then push through that resistance and challenge the old high. I probably would not be playing this ahead of the number. The other thing I'm looking at is, and guys, you can always do this. Back in May, reported earnings. It surprised and beat the number, and the stock went up that day and then sold off the next 2 or 3 days. Then again on another time, back here in August, it beat the number. The stock ran from 88 to 92, backed and filled, and then ran some more. The thing I would ask you, Mr. Cornfield, is to go back and look. There's a gap in this stock back in September 1st. There's a huge gap between 104 and 110. What's that? What caused that gap? It never came back and filled that gap, which means that it's some type of major event, major news. Nothing rumored. Something major news happened that the market did not fill this gap. So I would go look that up. Look for that. All right. Let's see. The Fed tapering over the overall market. The Fed's tapering. So here's the deal. I don't think, just checking my time, I don't think a 1% federal funds rate is going to send our economy into a tailspin. I just don't see it. I think, in fact, that we've been at this historical low levels, which has really screwed up the banks and screwed up the whole system. So I don't think 1%, a raise to 1% is a problem. The Fed tapering is a different issue. The Fed tapering, though, is not pulling money out of the market. It just means it's not putting as much money into the market. So liquidity is going to start. But I don't think all the cash is out there is in the market yet. So I don't see this. This doesn't frighten me. This doesn't bother me. We expected it. Another thing too is the Fed did not say anything today that we hadn't heard before. So what that means is the market's already priced in. The market's priced in the Fed's moves. It's priced in the correction. It's priced in because he's talked about, not correction. He's talked about tapering before. So the market's priced that in. It's priced in the tapering. It's priced in the fact that the Fed's probably going to start raising rates. And what's interesting is earlier this year, Powell said most likely will start tapering in November. He gave the market a warning on what he was going to do, and then he did it. So I don't think this is going to be a problem. Like I said, the market has it priced in. I don't think it's going to affect the market. And earnings are strong. Corporations are strong. The big challenge for the Fed now is the biggest problem the Fed has is making sure that inflation doesn't get out of hand. And then after that, they're trying to get back to what they call a level employment. We can never get to full employment. So I don't think it's going to have a negative impact on the market. I just don't. I think we're fine. Chewy. I haven't looked at this stock since it went public. Chewy. All right. So here's a couple things. Chewy missed the number last time they reported earnings. They missed it. They missed on revenue. They missed on earnings. Their loss was actually twice as bad as what they were expecting in terms of earnings, and the revenue was under the estimate by a couple 100,000, it looks like. And then from there, the stock actually gapped down. It's trying to fight its way back. So here's the deal. One, you got near term. Move this over a little bit. Near term, you got some resistance right around 76, 77, right where it is now, minor resistance. If you can get through that, number, you'll be in the old trading range between 77 and 87. Now, the deal, too, is that gap is right there also between 78 and 80 and 87. That gap's in there. So that means a lot of work. I'm not sure if you own Chewy. If you own Chewy, good luck with that. If you're looking to buy Chewy, I'd wait. Just off the technical analysis, there's nothing here to make me say I would go out, rush out and buy Chewy right now. You literally could be sitting in this stock Chewy for the next 2, 3, 4, 5 months, maybe in a year or two, trying to get back, work through all this clutter, all this overhang, when you could be in other stocks that are just ripping and running and making you money. So I would not be a big fan. I'm not a big fan of the stock right now. All right. Any other stocks you guys want to look at? And by the way, the one that you should also be asking is, you should also be asking James what he likes. James has done a real good job. By the way, James gave us Boot. I remember when Boot went public. A Boot Barn out of Texas. James gave us Boot Barn, and sure enough, Boot Barn reported earnings. They blew out the number. There was a small period of consolidation before the earnings. I'm just pulling up the chart. Yeah, so it had a small consolidation before earnings, right, and it was right near its all-time high. Earnings came out. They beat the number. Estimates for 93 cents. They reported $1.25. Sales, the revenue was estimated for $290 million. They came in at $312 million. So the stock just basically ran off that news, off of earnings. It looks really good. And here's another thing about this. Follow me, guys. Stock trades about 400,000 shares, 500,000 shares a day. And it's on NASDAQ. No, sorry, New York Stock Exchange. Trade 500,000 shares a day. What I'm telling you is that this thing can easily be moved up. And the institutional ownership and these institutional sponsorship is going to drive this thing up, and that's what you're seeing. So the stock looks really well. The reason why I bring it up is James gave us Boot Barn. And I'll type in the symbol right now. The biggest problem that you have with a lot of these stocks that have actually made these moves already is that you don't want to chase them. My thought process has always been, I don't pay more than 10% above the breakout. So when the stock does break out above its high or where I would buy it, I never pay more than 10% on the breakout. All right. I'm not sure what happened with Figs. Figs are IPO. It's been around for a while. Excuse me. It had a major move today, so I'm not sure what the move was today. I mean, why? And by the way, what's up, Henry? Um, that's right, Hank. Sorry, Hank. Um, Average daily volume is 1.5 million. Today traded 4.3 million. Open today at 35. Been as high as 40. What's with this? The low for the day is 34, and the high is 42. So you had a major one-day move in this ahead of earnings. I'm not sure what the news announcement is. Prior to this, whatever move is today, I did not like the chart. We've got let's see, one. So here's a number. You got 1, 2, 3. You got major support, resistance support at 35, $36 a share right there. And today's move blasted through that. And it put us back into an old trading range between 40 and 44. But prior to this move today, in other words, if I took this move out today, there's nothing in here that would make me want to buy this stock. In fact, the path of least resistance looks to the downside. So I'm not sure what's going on with this, Hank, but just be careful with it. I'm not sure what caused the move. You can do the research on that. And earnings are due out. And most likely on earnings, the forecast is for 3 cents. Small cap stock. So volatility is there too. The other one that somebody asked me for was LLNW. Lightwork Networks. Woo. I said woo because, well, hold on. Let me just go to a monthly chart. All right, Lightwork Networks went public in 2007 at $24 a share. And, I didn't mean to do that. Come on. Oh, what'd it do? Oh, man. I don't know what's going on with my charts. All right, bear with me. My charts are doing... Oh, let me close it out. That's what I need to do. Close that out. Jeez. Sorry about that, guys. So since the stock went public at an all-time high at 24, the highest the stock has been since 2008 is $8 a share. You're in a long-term trading range. So, hold on, let me go to a daily. LLNW daily. All right. So, I'm not sure what I can add to this other than the stock looks like it's bouncing off of its all-time lows at $2.40, $2.20. You got major stock ahead of between 320 and 340. Again, I'm not sure. So hopefully you're not offended when I say this. I wouldn't touch this stock. There's so many other things out there that are doing really well. The market set all-time high. The stock market, NASDAQ, New York Stock Exchange, and S&P 500, all set new highs. Why would we buy stock that's trading near its all-time low when the market's actually going to all-time highs? The path of least resistance is go with the trend, go with the market. The market is the tide. We don't paddle against the tide. We don't paddle against the current. We don't paddle upstream. We paddle with the current. Much easier. So in this kind of environment, I wouldn't be looking to bottom fish. I wouldn't be looking to bottom fish at all. I don't bottom fish in the first place, but there's no way I'd be buying something like this in this marketplace when the market's actually going to all-time highs. All right? Let's go find the things that are driving this market higher, and let's buy those. So I'm not sure what this company does, but whatever it does, what the chart is telling you that they got some major problems that they can't get out of their own way. Again, we're in a major bull market run here, and the stock is still not trading. And we've had a bull market run for several years since this company went public, and it has not participated. So my only comment to you would be is, since 2008, so this thing came public during the Great Recession, but has not participated and done anything since. And we've been in a bull market basically from 2009 to 2020 almost. We've been in a bull market run. No offense taken. I appreciate that. Thank you. Didn't mean to offend. And let's see. I'm checking my time. Oh, this is my last one. And LCID, IPO. When? IPO in October 2020. LCID. I'm just on the daily chart. Just bear with me. All right, I don't know much about the company. You're sitting here in no man's land. What I mean by that is it had a nice move a couple of days ago off a heavy volume for this stock. Now, let me see. Average daily volume is, all right, so these are millions. Okay, cool. Just want to check. But here's the deal. I'm going to zoom in a little more. It's formed a nice little trading range here between, looks like 33 and 40. The challenge you have is that there's stock back in February, hanging overhead. So let me zoom in a little closer. All right, you got some real minor support at 34. You got some minor resistance at 40. So it's in the trading range between 34 and 40. If you get through that 40 number, you're going to hit some resistance at 55, 53. So if you get through that 40 number, it might run for you. So if it gets through 40, it could easily run from 40 to 50, 53. But you're going to need some volume behind to push it. The thing I'd also ask you to look at is on October 28th, it had a major volume move and spike in price. I would go see what caused that. All right, guys. You know what I'm about to say. I can't go any further. It's an hour. It's almost my whole hour. I want to record this and save this. I look forward to seeing you guys next Wednesday. Keep watching. I'm going to start putting up more ideas and everything on the system. And also, I am actually a financially no. Let me see. I'm on the advisory board for a company, and I'm going to be putting up some videos for that company. So I'll tell you more about that. Just keep looking out for my post, and I'll talk about that going forward. All right, I appreciate you guys. I don't see any other questions, and I'm looking at my time, so it's time for me to hop. Appreciate you guys. Have a great week. Keep making money, and I'll talk to you later. Thanks. Professor Milligan out. Hey, what's going on, Richard?